U.S. households have record high debt. How concerned should we be about that? That's what I'm thinking. Hey, before we jump into U.S. household debt and how to think about that, I want to remind everybody, hit that subscribe button, punch that like there, let other people find this information here on YouTube. And with that, let's jump in. Maybe you've heard about this as well, but first quarter of 2025 here, U.S. Household debt set an all-time record, and lots of discussions about, how that works and what that means. So concerning, absolutely, but I found a graph in an article from the Apollo Group, put a link to the show notes so you can find this graph in the accompanying article, but take a look at what that says. U.S. debt, household debt, but measured as a ratio of debt to assets, is actually at a 50-year low. All right, so think about what that means. Absolute debt, the number, more debt than anything else, but compared to the assets and net worth of households at a 50-year low. Now, what does that mean? Like, how does that make sense? Think about it from a standpoint, if I own real estate as an example, right? Real estate, we oftentimes carry mortgages, right? Let's say I've got a farm, it's worth $500,000, and I've got a $300,000 loan on that, right? So I've got a debt of $300,000. But I've got an asset that's worth $500,000, right? So I've got $200,000 worth of equity, right? Let's say I sell that farm, buy a new farm, and my new farm, I've got a mortgage of $900,000 on that, right? So my debt was $300,000 on my old farm, now it's $900,000. 3 times as much debt. That's the headline. That's record debt for me. However, what if the farm property that I bought is actually worth $1.5 million? Right, that's the values also increase, right? So now I've got debt, $900,000, but I've got $1.5 million asset backing that up, right? So farm worth $1.5 million, debt of $900,000 on it. My equity, my net on that is $600,000 of equity, right? So is it bad to have $900,000 of debt versus $300,000 of debt? Well, maybe. If it's against the same asset, absolutely. Right? But if the assets have gone up, right, I'm in a better position than that. And that's what we're talking about, going back to that graphic, is that has household debt gone up? Yes. But assets, people's houses, people's investments, people's bank accounts, that has gone up to the extent that that ratio, debt compared to assets, is actually at a 50-year low. So whenever you hear something in absolute terms, hey, if I want to sell you a car for $50,000, is that a good deal or not? Well, it depends. If it's a Chevy Chevette, probably not. If it's a Ferrari, it's probably a great deal, right? So there's context. When we think about debt, especially at the household level, we do need to think about debt as a function of the overall household. And from that metric, we're at 50-year lows. So that's what I'm thinking about today. As always, interested in knowing what you're thinking about. Jot a comment in the comment box. Let's have a discussion. And as always, thanks for watching.